Hello, everyone. Mike Schoonover with the 812 Living Group and host of the 812 Living, the 812 and You blog. Today, we're going to talk to you about mortgage rates, what they look like now, what maybe they look like for the rest of the year. And so to do that, we brought in our local mortgage expert, Brad C. with Kentuckiana Mortgage Group. Brad, say hello.
Hello, everybody.
Brad, so we're early June 2021 recording this. The real estate market is still red hot. I just checked a little bit ago. We are up to 370 properties now in all of Southern Indiana that are for sale. About 120 of those are new construction. So the supply is still really, really low, really, really tight. If you can find a listing, you probably have a dozen or more buyers that are ready to sign on the dotted line to buy it. But we wanted to touch base with you today just to see where mortgage rates are and where they may go the rest of the year. So what can you tell us about that?
Yeah, so obviously, the general disclaimer, loan to value, credit score, all that stuff has impact on what rates are. But, for most conventional scenarios, we're seeing right around 3%, give or take an eighth. So 2.875 to 3.125, depending on the day, on 30-year fixed conventional. And then for most government loans, depending on credit score and all that stuff, we're in the mid twos. So seeing like maybe 2.5, 2.625 on some of the FHA, rural housing, and VA loans.
So still at historically low interest rates. I mean, we saw them pop up above 3 last year at some point, but they're coming back down again. It's just making for a great situation for buyers. What about people who are possibly looking to refinance? Are refis dead at this point, or still got some around?
Yeah, I don't think they're dead. Maybe there's some people that weren't in the situation to take advantage of it when they were as low as they were last year, and now they are. Or there's tons of different scenarios. Like you're talking about the supply and demand. Well, that's driving prices up, and maybe you bought last year and you only had 5 or 10% to put down, but maybe the value of your neighbor's house sold for much more, and maybe your appraisal is going to come in a lot higher now, and you can get rid of that mortgage insurance that you had because you didn't quite have that 20% you bought it. Maybe the score wasn't as good, and you've got some on-time mortgage payments, and your credit score is increased, and then that can get you a better interest rate as well. So there's a bunch of different scenarios. I think that the important thing is just reaching out to your local mortgage professional, and it's free to have a 5-minute conversation to see if that might be worth it.
Yeah. So when people think about refinancing, most people, and maybe you can correct me if I'm wrong, but most people are going to say, well, my rate's here, and I can get it to here, and maybe that's not worth it. But what you're saying is there's other reasons why refinancing may be beneficial.
Yeah, absolutely. And I think the most important question that people need to ask themselves is, how long am I going to be in this house? Because if it's only a year or two, maybe it's not worth looking into. Maybe that's not something you should even entertain. But if it's 5, 6, 7 years, well, maybe that's a conversation that we need to have.
Okay. So what is your general rule of thumb? If someone has what interest rate or what mortgage rate now, when does that make sense to call you from a rate perspective to see about refinancing?
I've kind of formed this opinion over my years in the business that if we can recoup the closing costs to do the refinance or whatever that may be in the first 12 months, then we definitely need to do it. If it's longer than 12 months, we maybe need to have a deeper conversation about how long you're going to have this particular mortgage. But, if you're saving $100 a month and the closing costs are $1,200, that's you've paid yourself back in 12 months, and then you're making money like that. In that situation, we should do it.
Okay. So critical point that I want our listeners to hear is, one, certainly if your rate is above 3.5%, maybe 3.25 even, give Brad a call and see what he can do for you on the refinance. But also, if you bought a house in the last 12 to 18 months, your value may go up. So you have the chance of possibly getting that PMI taken out. Or certainly you can go from maybe an FHA loan to a conventional loan because you have more equity now. So if you fall into any of those categories, get with Brad. I'm going to get some contact information from you, Brad, at the end, but it's worth checking. It's worth a 5-minute phone call to see if he can save you some money.
Yeah, and that's really all it is 5-minute call.
Yeah. So Brad, I gotta drop a bomb on you here. I didn't really talk to you about that. I was going to ask this, so hopefully you're prepared. But look, I had a client, as you know, that did a mortgage with you recently. And when you're doing the mortgage, you prepare this disclosure statement of all the costs, right? And then I had a client that went to one of the big online mortgage companies, and I don't want to name names, but they have all the commercials and they're super fast. And if we said their name, just about everybody that's familiar with mortgages would know who we're talking about. So they got their statement of all the costs and fees, and I compared it to what yours were, and there was more cost. It was more expensive. I just couldn't figure out why. Do you know why?
I do. So every rate and every interest, there's a margin, right? So as a broker, there's a flat margin built in, but retail lenders can make that margin whatever they want, and they don't have to disclose what that is. So if they can sell you on a higher interest rate and they make a more margin, they get to keep those funds. But they also get to hide what that margin is. So if you don't shop, or you don't at least get a second opinion from somebody, they may be charging you 2, 3, 4, or 5 percentage points more than another lender if they don't shop around, because they wouldn't know.
Okay. Look, I've been in this business for almost a decade, and I heard you say hide, don't have to disclose. Try, if you could explain that to us again, as if we're a 7-year-old trying to explain it to a 5-year-old. Where is this? I mean, we have all of these consumer protection laws, right? The financing acts that came out that require disclosure. What am I missing?
So first of all, there's an Indiana and a Kentucky, because we kind of work both sides of the river, loan broker agreement that discloses what our margin is, what Kentuckiana mortgage makes, and what we get paid by the lender. Okay. It's a flat percentage across the board with all of our lenders. Other retail lenders, or correspondent lenders or retail lenders, they don't have to disclose what that margin is. So they can make whatever they want if they can sell you on a higher interest rate. So let's just use a general scenario. Let's say today's par rate is 3%, and your 3% is your 3%. Well, if that retail lender gives you 3.25, that additional 1% or 1.5%, they can keep for themselves. Okay. Where if I go from 3 to 3.25, we make exactly the same. So that 1 to 1.5% or whatever that additional margin is, you get as a credit as one of our clients. We don't keep that. We don't get to keep that margin.
Okay. On that, are we talking a couple of bucks, a couple of $100? What is this costing the consumer?
It's a percentage of loan amount. So if you're looking at a $300,000 loan and it's 1.5%, you're looking at $4,500 that you could be paying additional for no reason, because if you don't shop.
Okay, so this is what I saw on this disclosure, that there was a $3,000 to $4,000 difference between your loan estimate and the other loan estimate. But we couldn't find exactly where that cost was coming into play. And you're telling me, with all of the consumer protection laws that went into place after 08, 09, that there are lending institutions that are legally able to hide that? There's a loophole?
Yeah, as a retail lender or a correspondent lender, they are not required to disclose the margin. Okay. And maybe that's just simply they got better lobbyists than us small town local brokers.
Okay. So you're saying retail lender. I want to try and put a face to this, and I know you're being nice not to name names here, but are we talking the big box banks that everyone would know the names of?
Yeah, so in your local branch down the road of big box bank that's got, branches all over the country, all the way down to any mortgage lender that is not a broker. So you can find, so as far as state licensing goes, brokers are licensed under the Secretary of State in the state of Indiana. Financial retail institutions are regulated by the Department of Financial Institutions. So if a lender is regulated by a Secretary of State, going to be a broker, DFI, going to be a retail lender.
Okay, so not to belabor this, but I think it's so important. My clients, your possible clients, are paying thousands of dollars extra if they go to a bank that has one of the big towers in the cities around the country, or even a small local. If they have bank in their name, or you know them to be a bank, then they're able to kind of have this loophole where they don't have to share that expense, and it's potentially costing my clients thousands of dollars. Is that fair?
Okay. Not only upfront, but on their monthly payment as well.
Okay, so what is the solution? I think you've said it a couple times. What is the solution for my clients to know if they're paying that extra?
Find a broker and shop local. I mean, that's the only way. It's that simple. We talked about the 5-minute phone call on a refinance. It's a 5-minute phone call for me to say, hey, what's your credit score? What's your purchase price? What's your loan amount? Okay, this is what your rate and closing costs should be. If you're getting a really good deal by XYZ online lender that's super fast, or the bank down the street, if they've got a really good rate and really good closing costs and are charging you a bunch of fees, we're going to tell you, like, wow, that's a really good deal. Stick with them. If not, maybe we can save you some money.
Yeah. And here's the thing. In my experience, you're as fast, if not faster, than the place that claims to be the fastest. But so look, it's just astounding to me. Again, I've been in this business almost a decade. We have all these consumer protection laws. The assumption was that everybody's on the same playing field, and that's not true. But it's just and I know we hear this in marketing all the time, right? Like with the gecko, 5-minute phone call can save you thousands of dollars. This is legit. This simple answer is check with a broker. Get a quote from your people, from the online guys if you want, but check with a broker and you might be able to save thousands of dollars for the same loan.
For the same exact thing. We're all selling the same conventional FHA, VA, USDA. Everybody's selling the same stuff.
Yeah.
Right. So,
and if they need to kick in a door, and if they need to kick in your door and talk to you face to face, you've got a door to kick in, not just an 800 number.
They can come visit me. That's exactly right. And I always tell it, if a lender has a multi-million-dollar monthly market budget, maybe you're not getting the best deal.
Yeah, fair enough. Because that money's coming back someplace, right? Okay, so Brad, I'm going to put this online. People need to hear this. So I'm going to be talking to my clients more and more about this. But what's the most important thing a home buyer should be considering or doing right now when it comes to mortgage? Again, it's a very tight real estate market. A lot of times they're racing to get the home before someone else. What should they be doing from a mortgage perspective?
I think talking to us or talking to a mortgage professional as early as possible in the process, because there's things that can be prevented. There's situations that we can try to tackle before you have an accepted offer, or there's situations where we can get you in a better position so you can make a stronger offer. Unfortunately, right now, the purchase agreement says what type of financing you're getting, and if we can get you from your credit score from where you need to do an FHA to where you can do a conventional, you're helping your chances. There's all kinds of different things that we can do, but we've got to have the information. We got to have the pre-qual, and we got to have all of that information to be able to help.
Yeah, look, writing an offer right now, super competitive. If the house is worth buying, it's more than likely going to have multiple offers. People are waiving inspections, they're waiving appraisals if they can. They're going all out. Buyers are going all out on their offers, and I'm telling you, folks, who your lender is matters. If there are 6 or 7 offers on the table, and one of those offers has Brad at Kentuckiana Mortgage Group, and the other offers have the online big box lenders, Brad is going to have Brad's offer, the offer that he's backing, is going to have an advantage there. It just makes a difference. Getting pre-approval is going to, again, help catch some problems possibly before they start, and put you in the best position to win the offer. Brad, just want to close this out. Where can people find you if they have questions about the refinance or they want to get pre-approved for a mortgage?
Yeah, so I use my cell phone, so it's 812-989-7555. Email address is brad@kyinmortgage.com, or you can go to our website, kyinmortgage.com. Or if you want to come kick in my door, we're down here on Main Street in New Albany. If you've been to Agave and Rye, you've maybe seen our building across the street.
There you go. Shout out to Agave and Rye. I'll put the contact information that Brad just talked about, minus his cell phone. I'll spare you that. But I'll put that in the notes, and I'll put that on the blog. Folks, he's one of the best in the business. He is local, and he's got a door to kick in, and you can go get pre-approved for a mortgage and grab some stuff from Agave and Rye. Brad, thanks for being with us today.
Yeah, thank you, Mike, so much. I appreciate it. Have a good day.
All right.